Hello everyone, I am Pratap here. We are at part 4 of lesson 12. This is the practical lesson to part 3 of lesson 12. In case if you are attending this video directly without completing the earlier videos, I request you go through our free training program and all the earlier videos are available under the playlist Supply Demand Zone Price Action course. I am providing the link to that playlist in this YouTube video description. By clicking the link, you can access all the earlier lessons, or you can also access all the earlier lessons from our Telegram channel. I am also providing the link to the Telegram channel in this YouTube video description. Now let us get into the session. And in this practical session, let us focus on identifying the curve in both all-time high and all-time low scenarios. Previously you learned in all-time high scenarios, there will not be any supply zone on higher time frame HTF. Similarly, in all-time low scenario, we will not find the demand zone at HTF time frame, that is a higher time frame. So let us look into the charts. This is the first example, Reliance. This is the monthly time frame chart. We are using this monthly time frame as a higher time frame, that is HTF. So let us draw the demand zone, monthly demand zone. Here we have a rally, base and rally. Let me change the color to monthly color. So MDZ. Okay, this is a monthly demand zone. So is it having any supply zone? No, there is no supply zone here. That means this demand zone is an all-time high demand zone. What is all-time high demand zone? The demand zone that is not having the supply zone, and also the demand zone that should be the nearest demand zone to the all-time high. Compared to all other demand zones in this chart, this should be the nearest demand zone to all-time high. And the other condition is, there should not be any supply zone, monthly supply zone in this chart. Please remember, because it is a monthly chart, we are focusing only on the monthly zones. Okay, which candle is having the all-time high? This is the candle on July 23 is having the all-time high. So when there is an all-time high, let us draw a horizontal line that describes the all-time high prices. So here I am drawing a horizontal line. This horizontal line indicates all-time high. So let me mark a text a little above this. So ATH indicates all-time high. Okay, now for identifying the curve, because this is the higher time frame zone, and in higher time frame, that is HTF, we should always define the curve. How do you define the curve? You draw a range, a vertical line range from distal line of the demand zone to distal line of the supply zone. But here we didn't have a supply zone. That's why the procedure is changed. That is what we discussed in the previous video. So what is the procedure? Now you need to draw the range from distal line of the demand zone until the all-time high. So let us take the info line from the trend lines. So here we have an info line. So let us draw from distal line of this monthly demand zone to all-time high. So this is the range of this entire monthly demand zone to all-time high. So what is the total value of this range? So 802.90, so close to 803. Okay, now for identifying the curve, the another name for the curve is location. So for identifying the location, what you have to do in all-time high scenario? If it is not all-time high, that means when there is a supply zone and a demand zone, this range, D2D range, we will divide into three parts for buyer's area, seller's area and equilibrium. Buyer's area technical name is low on the curve, LOC, and seller's area the technical name is high on the curve, that is HOC, and equilibrium short name is EQB. But here there is no seller's area. In all-time high scenario, there is no supply zone. When there is no supply zone means there is no seller's area. That means there are no institutional pending sell orders. Because there is no institutional pending sell orders, we cannot define the seller's area. Then what are the remaining two areas you need to identify? The buyer's area and the equilibrium. That is the reason why this entire range should be divided into two parts. And the first part is buyer's area, where you can find institutional pending buy orders, and the other one is equilibrium, and that supports both buying as well as selling at a lower time frame, LTF zones you can identify. Currently we are at higher time frame area. So that is the reason why this range I am dividing into two parts. So what is the value of this range? 802.90 paisa. So let me take the calculator. 802.9 divided by 2. So that means the buyer's area is having a range 401.45 and also equilibrium is having the range 401.45. So let's divide this entire value. So what is the starting value? The distal line value of this demand zone. That is low of this demand zone. The low of this demand zone is 1818.55. So add that value to 401.45 plus 1818.55. So 2220. At 2220, you need to draw a horizontal line. So let me draw a horizontal line. That means divide into two parts. Okay. So here this first part is buyer's area, that is low on the curve, a technical name, and this one is equilibrium. So let me mark for our easy remembering purpose. So this is a buyer's area, the technical name is low on the curve, LOC. So this is the low on the curve. And the next one is equilibrium. The other area is equilibrium. So EQB is the text we are giving. So what exactly the meaning of LOC and EQB here? In LOC, because this is a buyer's area, this area is good for buying purpose. And the equilibrium area is supported both buying as well as selling. That means you can take buying decisions or selling decisions in equilibrium area, but in low on curve, you have to take only buying decisions. Provide trend is supported. As per the trend, we will take the decisions. Even though trend is supporting, we can't take selling decisions in the buyer's area. In buyer's area, trend supports, you take only buying decisions. If trend does not support, you cannot take buying decisions in the low on the curve. That is buyer's area. Even though it is buyer's area, we are not taking buying decisions because the trend is not supporting. And what about in equilibrium? Depending on the trend, we take our decision because this area supports both buying decisions as well as selling decisions. If trend is supported, we can take selling decisions, or if the trend is supported, we can take buying decisions. So one of these decisions you can take depending on the trend. So that is the reason why we need to identify the trend. So where do you identify the trend? Trend always we identify in intermediate time frame, ITF. Currently we are drawing the curve. The curve you have to identify in higher time frame, HTF. We have completed the task. Now you have to identify the trend. So what is the trend for monthly time frame? You need to identify the trend one time frame below, that is weekly, because monthly is the higher time frame, one time frame below is intermediate time frame. So now I am shifting from monthly time frame to weekly time frame by clicking W in this time frame toolbar. So now we change it to weekly time frame. So now what we do in the weekly time frame? Weekly time frame we will identify the trend. So how do you identify? Based on the zone violations. See, currently the prices entered into all-time high. Probably by the time prices reach, the trend would have been uptrend. How do you identify? Based on the zone violation or based on higher highs, higher lows, lower highs, lower lows. One of these techniques you can follow. Okay, if you look into this, let me show you. Even though we practiced earlier, let us practice because it is an important concept. See, here we have a drop, base, drop. This is a monthly supply zone. Sorry, weekly supply zone, because trend is on the weekly time frame here. So weekly supply zone. Let us assume when prices reached this low point, it is a downtrend. Let us assume, time being. It might be right or wrong. Just time being assume, so that to confirm what is the recent trend. So definitely the trend would have been changed because this supply zone is violated. The trend would have been changed to sideways. Okay, what is the next supply zone? Here we have another supply zone. Now by violating this supply zone, the sideways is definitely changed to uptrend. Now a little above that we have again another zone. This is also violated. By violating this supply zone, uptrend is continued to uptrend. Already trend is uptrend. By violating the supply zone, uptrend is continued to uptrend. And we have one more supply zone, but this is LOTL scenario. So both these zones together is violated, and then uptrend is continued to uptrend. So that means by the time prices reaches all-time high, definitely the trend is uptrend. Now where is the nearest demand zone? Rally, sorry, drop, base, rally. So this is a weekly demand zone. Now by violating this weekly demand zone, what happened? The trend is changed from uptrend to sideways at this point of time. Or you may say there is one more drop, base, rally, which is having confluence with this zone. That means both zones are overlapped. That is LOTL scenario, level on the top of the level. That means if both the zones violated, then only trend will be changed. But now drop, base, rally. In drop, base, rally, is the zone is violated? No, it is not violated. Now in this scenario, still uptrend is maintained. It's not uptrend is changed to sideways. It's not uptrend is changed to sideways. Why uptrend is not changed to sideways? Because we have a LOTL scenario like this. If both zones together is violated, this is a drop base rally, again drop base rally. Both zones are overlapped each other. When they are overlapped with each other on the same time frame, that is called as LOTL, level on the top of the level. And if both the zones together are violated, then only the trend will be changed to uptrend to sideways. But the prices reached very close to the distal line of this, the bottom demand zone, but not violated. After that again prices turned up, definitely uptrend is not changed, uptrend remains same. Even, let us assume, this wick is slightly below this. Currently it is not below, slightly below this. Then the trend would have been changed. In that scenario, the trend would have been sideways. In case if the wick is a little below this. At present it is not there. Even then, sideways, see here we have a drop, 2 base candles and drop. So this demand zone is violated. Now also, now in case if there is earlier, if it was sideways, now the trend is changed to uptrend. Either way you can confirm, but anyway, previously the trend was not changed. Now uptrend is again continued to uptrend. Even by violating this demand zone, the trend is already uptrend. Now uptrend is further continued to uptrend only. There is no change in the trend. That means trend is very strong, uptrend is there. Now uptrend in equilibrium, what kind of decisions you have to take? We have to take a buyer's decision, buying decision. Because the trend is uptrend, we are in the equilibrium. Equilibrium supports both buying and selling decisions. Because the trend is uptrend, we cannot take selling decisions in equilibrium. We have to take only buying decisions. But where you take the decisions, buying and selling decisions? Not in the higher time frame, that is HTF, or not in the ITF, that is the intermediate time frame. We will take the decision in lower time frame, that is LTF. Lower time frame only we will take buying and selling decisions. So what is the lower time frame? The lower time frame is one time frame below weekly. What is one time frame below weekly? That is daily. So go to the daily, there you identify demand zones and supply zones for buying and selling decisions. So now we are going to the demand zone. Why we are going to the demand zone? Sorry, we are going to the daily time frame, not demand zone. I'm sorry. We are going to the daily time frame. Why we are going to the daily time frame? Because we have completed identifying the curve. We are also completed identifying the trend. Now you need to identify your buying and selling locations. That's why we move to the daily time frame. Okay, this is equilibrium area. It supports both buying and selling decisions, but trend is uptrend. That's why you should look for a demand zone. Next time when prices entered into that zone, definitely there are higher chances of getting success. Because there are higher chances of getting success, we always look for demand zone. So what is the nearest demand zone we have? Here we have a drop and then we have a base candle. After that we have a rally candle because there is a gap between this candle, this base candle and the next candle. You add a hidden body. The moment you add the hidden body, this entire candle looks like a rally candle. So now let us add the zone. Which zone is this? The daily zone. So let me change the color to daily demand zone. So now if the prices are about to enter, we can consider this zone for the buying purpose. We are not yet confirming this zone is a buying decision. We are not yet confirming. Why we are not yet confirming? Because you need to learn some more concepts. Few more concepts. After learning, you will get a better reasons why we should consider or why we should not consider. But time being, whatever the concepts you learned, based on those concepts, we can consider. So that means you should not go for the real trading. You can go for paper trading. Previously I told you, you have to start doing paper trading until the completion of the second phase of the training program. What is paper trading? Take a paper. Assume here you are buying in this area. Which location you are, which price you are buying, note down. Identify your stop loss. Identify your target by drawing its opposite side supply zone. And next time when prices enter into this, check whether your trade is going to be a successful or is it going to hit the stop loss. That way you gain some knowledge. And there are some softwares also available for doing paper trading. they will show you the real data, and you can place your order as if you are placing in the real order. But actually that won't be executed. It is only a virtual trading. We call it as a virtual trading. The paper trading online, if you are doing, that is called virtual trading. So that way also you can do. Okay. In case if this zone is your buying zone, then what is your target? For that you should identify the immediately available supply zone. Is there any supply zone on the daily time frame available? So start from here, go little above this area, you may find here you have a ERC candle, and then you have 3 base candles, and then you have a drop candle. So let me draw the zone like this. But the color you have to give daily supply zone color, because this is a supply zone. So I am giving DSZ color, daily supply zone. So what is your target? That is the proximal line of this particular supply zone. And what is your entry? That is the proximal line of this demand zone. So what is your stop loss? That is the distal line of this demand zone. So that way you calculate what is the risk of this zone and what is the reward you are going to get, the risk and reward value. And then divide risk and reward, and then you identify your RR. Is it 1:2 or is it 1:3 or is it 1:4? As I told you, 1:3 is a good RR. And if you are a beginner learning these concepts first time, always look for the stocks having 1:5 RR. If you are a highly experienced person, you can even accept 1:2.5 RR. Okay, these are all few points related to risk reward. You have to practice all these concepts together. Whatever the concept you are learning, apart from that concept, rest everything also you should practice. By the time you go to your real trading, probably by end of this month, mostly by end of this month, you will be in a position to identify your own trades. You will be able to get that skill. So that's why start practicing. This is the time you have to start practice. You have another 15 days time. So you have to practice a lot. Okay, this is about how we do the trade plan when there is no higher time frame supply zone. This is all-time high scenario. Exactly the same way, let me show you one more example for all-time low scenario. So we are moving to another stock. The symbol name is Campus. That is Campus Activewear Limited. So I identified this stock with the help of our NeoStock software. It is an all-time low scenario. Currently it is moving at all-time low. So let me go to the monthly time frame and look into this stock. Currently this stock is at all-time low. First let me draw the existing supply zone. We have a drop, we have a base, and again we have another drop candle. So let me draw the monthly supply zone. Let me change the color to monthly supply zone. But is it having any demand zone, monthly demand zone? No, it is not having a monthly demand zone because we have a all-time low candle here. So let me draw a horizontal line that indicates the all-time low. So let me mark with the text this all-time low. ATL indicates all-time low. Okay, because there is no demand zone, we are having only the supply zone. What you have to draw? You have to draw the line from all-time low to the distal line of the supply zone. That is the range. That range you have to divide into two parts. Because there is no demand zone, that means there is no institutional pending buy orders at a monthly time frame. And this is the higher time frame, HTF. So that's why we can identify only the seller's area and we can identify only the equilibrium. We cannot identify the buyer's area because there is no demand zone. So let me draw the range by using info line from all-time low to okay, this is the range. So what is the range of this value? 142. So in the calculator, 142, how many parts we have to divide this range? 2 parts. So that's why divided by 2. So we got 71. And this 71 you need to add to the low of this all-time low value. What is this all-time low value? The low of this candle. That is a 237.80 plus 237.8. Sorry. 237.8 plus 71. 71 is the half of this range. So at 308 or 309, you need to draw a horizontal line. Let us draw the horizontal line. So 309. So the first part is equilibrium, that is near to the all-time low. The second part near to the supply zone is high on the curve, that is seller's area. The seller's area technical name is high on the curve, short name HOC. So let us mark HOC and equilibrium for our easy remembering purpose. This is high on the curve and this is equilibrium. Okay, now we have completed the curve, identifying the curve or identifying the location at higher time frame HTF. So in this example, monthly is our higher time frame. Now next, what is the next step? Identifying the trend. So go one time frame below. What is one time frame below? That is weekly. So in the weekly, easily you can tell. Why easily we can tell? Because there are lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Continuously we are getting lower highs and lower lows. By looking into the chart, easily we can tell this is the lower high and this is the lower low, lower high, lower low, lower high, lower low, lower high, again lower low. So easily we can say the trend of this particular stock is downtrend. So now we identified the trend also. So what is the next step? Once you identify the location and trend, you need to go to the identify your entry zone and target zones. Where you identify? In the lower time frame, that is LTF. What is the lower time frame? So one time frame below to weekly, that is daily, because monthly is a higher time frame HTF, weekly is intermediate time frame, that is ITF, and daily is your lower time frame LTF. So I am changing the time frame from weekly to daily. Now we have the locations on the chart, high on the curve and equilibrium. Currently prices are at the equilibrium. Equilibrium supports both buying decisions as well as the selling decisions. But the trend is supporting only selling decisions. Why trend is supporting selling decisions? Because it is a downtrend. So that is the reason why, even though equilibrium supports both buying and selling decisions, you have to plan only for short trades. The reason for planning short trades is the current trend is downtrend, even though equilibrium supports both buying and selling decisions. That means if you want to look for a trade, you should look for a supply zone, the immediately available supply zone. So we have a valid supply zone. here. See, we have a legging candle, that is a rally candle. Why rally candle? Compare, this is a ERC candle. If you further add, there is a gap. If you further add hidden body, the more body this candle will get, more than 40%, and this entire candle is qualified as a rally candle, not failed ERC candle. It is a rally candle, ERC candle. And then you have 3 base candles, and then you have a drop. So draw the supply zone. Because it is a rally candle, till the high of this candle, rally candle, you have to mark the zone. And what kind of supply zone it is? Daily supply zone. So change the color to daily supply zone, DSZ. So next time when prices enter into this zone, you can consider, I am not saying you are confirming, you are consider the zone forever short trades. When you have to confirm? After learning some more concepts in the upcoming chapters. But time being, you are considering this zone forever short trades. Okay, what could be the target in case if this is the supply zone where we are going for short trades, then what should be the target? The immediately available demand zone. So what is the immediately available demand zone here? So here we have a leg candle, that is the ERC candle, and moreover this is a failed ERC, you can use it for leg in, and then you have 3 base candles, draw the zone, demand zone, daily demand zone. So if prices enters into the supply zone, this is going to be the target, that way. Suppose if prices enter into this demand zone, can we go for a buying decision? No, you cannot take the buying decisions. Maybe it may work, it doesn't work. That is a different story. But we cannot. Why we cannot? Because even though this demand zone is in equilibrium, the trend is against to us. You already learned trend is our friend. In whichever the direction trend is showing, in that direction only, you have to go for the trade. Because currently the trend is showing towards the down on the intermediate time frame. You should not forget. Trend always we look in the intermediate time frame. That is the weekly time frame. Trend has confirmed downtrend. That is the reason why you cannot take buying decisions. You should only take selling decisions. I hope you got the clarity. See, now what we did in the all-time low scenario also, we have identified a trade plan. We have only supply zone in this particular chart on monthly time frame. Because monthly time frame there is no buyer's area, we identified the seller's area and also we identified the equilibrium. Seller's area technical name is high on the curve. After that, what we did, we went to the weekly time frame. There we identified the trend. After that, what we did, we went to the daily time frame. There we identified the supply zone for entry point of view and also we identified the demand zone for the target point of view. Now, what is the exercise you have to do? You just calculate the risk and reward and also you calculate the RR by dividing the risk and reward. So, is it 1:2 or is it 1:3 or is it 1:4? As per your RR, is it a suitable zone for the trading purpose? That way you have to take the decision. See, you must complete these exercises. The reason is, in the upcoming chapters, very soon you are going to enter into one more risk management concept. Already you learned in the phase 1 the risk management. Now, based on the time frames, also you can do the risk management by using the time frames. Phase 1 you didn't learn time frames. That's why we didn't talk about the risk management as per time frames. Now you are going to learn the risk management as per the time frames. Probably by end of this phase 2 training program you will be learning. At the time further you will learn how to fine tune the zones to minimize the risk so that we get best risk reward for doing the trades. You will learn all those topics. That way you will get successful trades. If you want to understand all those concepts, you should thoroughly practice all these exercises. Always calculating the risk and reward as per the concepts you already learned in the phase 1 training program. Remember, all these concepts only going to give you the money and also going to save your money when the trade is against you, your trade plan. The prices are moving against your trade plan, so the stop loss will help you to save your capital. You only get minimal loss, but when you get profits, you get maximum profits. So that's why always you have to follow risk reward. That is the topmost important concept. Let me repeat again. Risk reward is the topmost important concept in our entire supply demand zone price action course. So don't ignore it. So these are the two examples that demonstrated all-time high and all-time low scenarios at a higher time frame, that is HTF zones. Hope you got the clarity with these examples. So in the practicals we have seen, we identified the curve at all-time high scenario. We also identified curve at all-time low scenario at HTF time frames. And then intermediate time frame we identified the trend, and the lower time frame we have identified the demand zone, supply zone, stop loss, entry and target. But you have to do these exercises. And also we validated the zones, the trades, what we want to plan. Is it as per the trend or is it as per the curve? Are they satisfying or not? That is also we validated. We should not forget that point. In the upcoming, that means in the next lesson, let us focus a very important concept called price direction. This is another very important, and this concept is mainly helpful to us for identifying the safe trades. We are identifying the zones, the buyer's location, seller's location, based on the trend. Apart from location, apart from trend, we are also introducing a third parameter for validating our zones, that is price direction. If the price direction also satisfied by that particular demand zone or particular supply zone, then we can plan our trades as a long trade or as a short trades. So another important topic. So let us all meet again in our next lesson. Thank you.